This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
At this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, January 8th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn down a half at 446 1/4. March soybeans were down a penny at 1066, and March Chicago wheat was unchanged at 518. This morning, the USDA announced the sale of 132,000 metric tons of soybeans to China, and that was for 25. We also had weekly export sales. We're now completely caught up. This is through January 1st. Pretty poor on the corn side, 377,600, well below the low end of the estimates there. On the soybean side, also towards the lower end, 877,900. Wheat was far below the low end of the estimates, 118,700. Meal, 158,100, and solid on the oil side, 24,900. Upper end of the range was looking for a number closer to 20, so pretty good on the oil. We'll jump right in here this morning, guys. We're still, as we've mentioned a number of times, grinding towards Monday's report. I would say pretty disappointing on the export sales side. I think folks were anticipating announcements to China. We've had a couple this week, roughly 450,000 or so announced. So they're getting closer and closer to hitting that target. But I guess, Dustin, maybe share a few thoughts here as we start the morning, and then we'll throw it around the room.
Yeah, so this is first kind of poor sales report in a while for corn, that is, and we'll just have to see if that's a trend that is just short term because of the holidays. Jason kind of mentioned that before the report, before we started this, or if it's not the pace that we expect to continue all the way through. If you look at the WASDE report, they have a fairly lofty projection for exports already, and that could grow if the pace continues like it did last year. We're already showing record exports, really good pace all the way out in our projections. But that's got to continue, and we still have sort of last year's safrinha crop that we're going to compete against, and there's a question on whether or not some of this demand is a little front loaded. So just kind of keep that note for the next couple of export sales reports. If this is a trend that continues, I think we've already projected some really good demand numbers out forward.
Very good. Ben, what's on your mind this morning?
Yeah, I don't think it's a huge shock that we saw poor sales this morning. Those were reported for the holiday week. I think next week's will be more important. More pressing on my mind today is watching corn and beans just continually flirt around their 200-day moving average. It's interesting that we're heading into this huge report. This is a big report every year, but I think it has more credence this year because what we've gotten was kind of from a government that was not fully functioning on all cylinders. If you go back to starting in October, November, we missed November, those reports. So I think people are sitting here, they found a place that they're willing to maybe exchange some contracts and, beans around the 200-day, corn around the 200-day. And the data that we get coming out of that report probably has, I would think, a fairly significant impact on what the next month, 2, 3, 4 looks like. That being said, you look at the charts and, in corn, the 50-day is trying to get above the 200-day. People refer to that as a golden cross, might draw in some more money. But the volume that's traded in corn between 44 and 48 is tremendous. So I expect us to move. Also keeping an eye on the inflation trade. There's a lot of talk rolling around about that and the possibility that all the things that are coming together, we're going to lead to more inflation. So A lot on the horizon this week. Rebalancing starts on Friday, and that's everything is trumped by what happens on Monday's report.
Yeah, Justin, anything to add?
Yeah, just something to add on the corn. I think we talk about exports and demand, and I think we've talked about it before, but just to remember how big of a feed and residual number we have written down. And to me, I think it's to oversimplify it, we have the border closed. We have a lot of livestock stuck in Mexico. We're exporting a lot of corn to Mexico. That's not just some new miraculous demand. That's bushels that are moving to feed cattle that should be fed here. So to get excited about the exports is fine, but I think you also have to have a dismal outlook for the feed demand. You can't have both. We don't have the animal numbers to support, both sides of that demand, the exports and feed. So I think if you want to get super excited about a yield cut, in my opinion, the first 500 to 700 million bushels comes off feed and residual. And you could argue that feed and residual, realistically should be lower than last year with what we know about animal numbers and where animals are. So I'm not trying to, put a wet towel on this, but, we have to really not just ignore that giant number that they have in feed and residual.
So even a significant yield reduction would be offset, in your opinion, by that feed and residual. 500 to 700 million bushels is a big number. So, yeah. From a yield perspective, that's a big yield cut.
Yeah. And you could go, I guess, go along with the feed and residual number with a 185 type, big yield, because they just have to find a way not to have a 3 billion carryout. Right. But if you start cutting yield, that number looks more and more ridiculous. And when they put those numbers down, you're assuming cheap prices and you find a way to use more and more corn. So it's hard to have it both ways. You can't say we're going to have a price rally and use all this, call it residual. That's always their kind of fudge number. But that number, it's just not real. So I think that's just the problem with the corn market that I have long term. Short term, we talked about on the show many times, is the supply and demand, like the current supply and demand and what it ends up being. And I think Dustin's done a good job in the letter of talking about, just the willingness of farmers selling versus the big demand book that we have in the export market, right? So there is a supply and demand near term, and that's, I think, what's had us rally off the low and stay stabilized at these prices. Going forward, you look March forward, I think that could be a tough battle. If the safrinha crop looks good and, those kinds of things, I think we're going to be struggling to keep a 450 type price personally, unless there's some currency, big inflation trade, where just money is flowing into commodities. That's a different story. And maybe that's where, to Dustin's point, spreads get really wide and it's, that's a different ballgame. That's just money coming in to prop up the flat price. Outside of that, I think if you look at the balance sheet, I think it's just tough to get corn tight, if you will, unless it's a really massive cut. I'm talking like 177 or below. Just my opinion there.
Yeah, we got did see some average estimates start to roll through this morning, and it looks like 184 kind of gets it done for a lot of folks. On the corn,
which is funny because 180 was supposed to be ridiculous, if you guys remember. Back in the day, 180 was ridiculous. Now we're getting excited about maybe cutting to 184. So just trying to put in perspective where we've come from, where we're at.
Yeah, looking at those average estimates, they've got 182 to 186 average yield guess, and then average, or that's the range guess. The range carryout projection 1.772 to 2.235. I'd really like to see the hula hoops to get to the 1.772. To Justin's point, feed demand is reported 634 million bushels above last year. Arguably, you could say that's going to be a hard task to do because of the Mexico situation. And if you look at fourth quarter of 2024 demand, which is June 1st through Sep 1, we had a surprise 200 million bushel stocks build almost, and they did not revise the June 1st stocks number. And we know the hard numbers of ethanol and exports. So naturally it's feed and residual, that's going to have to be dropped within the USDA's presumptions. So that would also jive with this is going to be the first stocks count change, disappearance change, that we'll go and try to measure that feed number again, SEP1 to DIS1. And if that's why I think this report could be a bigger one, is that naturally the first report, I guess they're going to just say if disappearance is lower than expected, they could chalk that up to higher yield. It's probably going to be more the March one where we start to measure that disappearance a little bit better. But I would argue that that's the feed number is probably the one that looks the most ridiculous from our end.
Yeah, I mean, if you knew nothing else, right, and you just looked at that number and you looked at, cattle's at all-time highs by 50% because there's no cattle, you wouldn't say, you know what, I think we should raise feed demand 600 million bushels. It'd be hard to argue that it should be higher. It should be lower.
Right.
So again, if you knew nothing else, now knowing that they throw that word residual in there to basically, CYA on their yield estimate, that's kind of a fudge factor to get to where they want to be. But I think it's something we can't just ignore.
I know Ben had something to add here, fellas.
Yeah, to that point on corn feed, we had a tremendous wheat crop this year as well, and I'm sure that that's working its way in there. It's probably not going to help corn to a certain degree, but I thought it was interesting when we talk about feed, the health secretary and kind of unveiling their new food pyramid. Not that it's going to make a difference today or next week or next month, but the suggestion was that most Americans need to double their protein intake by 2x. So you put things out like that, but there's not really a plan to get there. And then affordability factor, we always think in terms of exports and biofuels as our demand base. So I thought it was interesting that they had such an abrupt shakeup of that food pyramid and the guidelines, but that was the verbiage that most Americans need to double their protein intake. We've seen a lot of different changes in, dietary fads and trends, and that's certainly one that's, I think, in the last few years has become a little more prominent. So it'd be interesting to see if they have any plan together in order to keep cheaper proteins while we increase demand by ever how much that means. Not that people look at the food pyramid and go, well, I've got to do this now, but in time there should be greater trends, I guess.
So I think that's certainly been the trend. I think what's funny about that is you'll probably have all the anti-Trumpers just start scarfing down loaves of bread just to show him who's boss. So maybe wheat demand actually goes up. Yeah.
Could be ballistic.
Carb up. Yeah.
Jason, what do you got?
No, I was just going to add, I think it's like the food programs, right? In school programs.
That's a big deal.
It's the government push to put more protein and less.
Which should be.
Which should be. It's not, I think to Ben's point, like, are we really going to go eat? People who eat protein are going to eat protein anyway, and they always have. But I think it's the food programs and stuff that could change that demand story.
Yeah.
Mm-hmm. Yeah, and we talked about it yesterday. It's a big infrastructure thing too. I mean, you got to put kitchens into a lot of these schools. I mean, they have to, if you're going to really go after processed foods, there's a big change in how they do this.
Ribeyes for lunch, school lunch. Oh. I mean, the old square pizza days, and like that's
so good. Yeah,
corn dogs.
Yeah, now we're going back to ribeyes, and I mean, what a good time to be
whole chicken.
Yeah, halibut.
Halibut.
What a time to be alive.
Yeah.
Well, I guess as we're talking about, go ahead, Ben.
I'll say the true trend change for Americans will be to not take anything out and just double the protein, right? That's where we've been for the last 50 years.
Eat more. Yeah.
Just eat more.
That's what I heard. Well, on the case of ribeyes here, we'll move over to Ryland. Right, first time since Christmas, we traded lower yesterday in cattle. And pretty weak cutout in hogs kind of set us back a little bit. So I guess what are your thoughts here as we start the day?
Yeah, no, it's a little pullback. I mean, I think just overall, especially kind of led by the feeders, this is the first down day we've seen in 8 sessions. I mean, it's been a pretty magnificent rally. Obviously, cash is still really strong. just from a number standpoint, everything's still really tight. But we are seeing those buyers start to come back now. Auctions are open after the holidays. So we're starting to see a lot more on the demand side, but I just think we got some covering. Just in general, you know what I mean? So did see the pullback, didn't really test any major moving averages. I think everybody's looking at the 100-day kind of as that key kind of crucial support level. But on the other hand, we really didn't see much cash, at the beginning, in the middle of the week, 360.5 in Iowa, and bids were around 232. On the live side, the asking price is around 235. So I think you got the board kind of right there, with those asking prices, and we'll see if the Packers really want to pull the trigger. I mean, it still seems like we're expecting a little bit better beef performance, tighter slaughters this week. So we'll see if that's actually going to help support here. But I think at this point, cash is going to fall somewhere probably between those levels, if not maybe just a little bit better on the steady side. So we'll see if that comes to fruition. And on the hog side of things, it just looked like, once again, just some covering, and you pretty much took back a lot of the early week gains after that big up in cash. Cash price is still pretty stable here, up down 375. So just kind of coming back off that big move that we saw. And then carcass obviously is supposed to seasonally kind of trend higher here. We were up $1.04, we're at 92.29, bellies were back up. So I just kind of think we're in the midst of maybe some repositioning on the fund side of things as well. So it just feels like hogs still kind of in this range bound kind of trade. So we'll see if we're able to shake that out with maybe some better carcass news in the next couple of weeks.
Very good. I appreciate the update there. Just came into the open. We got March corn down a half at 446 1/4. March soybeans are down 2 3/4 at 1064 1/2. And March Chicago wheat is down 1 3/4 at 516 1/2. One thing to note, tomorrow's Friday. We will have Fun Fact Friday, so be sure to tune in. Never know what you're going to get there. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.